Hello, good afternoon, and very warm welcome to tonight's Trading the Markets Live, which is brought to you by the Live Trade Room. And apologies, we're starting this webinar a little bit late this evening, this afternoon, should I say. So without further ado, what we look to do during this session is to identify what we refer to as high probability trades. We try to explain to you how we identify those opportunities, what we look for, the characteristics of each trade that we look to get into. And then if we get those opportunities and they present themselves during this broadcast, we'll be looking to take those trades live with real capital. That's important to be said, and go through that whole process really. So we're looking across these markets right now. There's a lot of retracements of certainly Friday's moves, and last week was a little bit of a choppy trading week. So we're wanting to establish kind of who's in control of markets, what direction are markets likely to move. So we've got a method in order to do that. So that's what we're going to get into. We've got some US capital coming in around about now. So this is we're entering the US trading session. So the cash market's open. So we'll see some capital moving into these markets. Potentially, it doesn't have to be the case, but if there is, we'll see where that capital is going, and we'll see what opportunities present themselves. As always, if you can give us thumbs up on the video if you enjoy it, if you can subscribe to our channel, click the notification tab, and we'll notify you whenever we go live. Okay, so without further ado, let's get straight into it then. If we could start, as always, with our risk warning. For more information about learning how to trade these financial markets, you can just go to the live trade room for more information, and you've got a lot more information there. Okay, so let's begin with a review of potential market moving news. So we want to be mindful of what's moving markets, and the fundamentals are essentially what drive markets. So we can use price action and sentiment to get a better kind of foothold, but these markets are a discounting mechanism. So as some new stimulus is fed into the market, i.e. through a variety of different news sources and data points, the markets try to correct accordingly. So if there's a major interest rate announcement, you know, the stock markets and the currencies of those markets will adjust accordingly, up and down, depending on whether the interest rate moves higher or lower. If it's planned, it's generally priced in. If it's a bit of a shock to the market, you'll see large erratic moves. So that's I suppose the nature of trading these financial markets. So as a result, what we want to do is make sure that we understand what news events are likely to occur, and you know, are they likely to impact perhaps our trading and the markets we're currently in. So today there's not a huge amount, but we do have an important bond auction today and tomorrow from the US. So the US government are raising capital, and they're doing so at 6 o'clock. So today is the 10-year bond auction, and tomorrow is the 30-year bond auction, again at 6 o'clock. And to just touch upon the bond yield, so we're looking at 1.34 as things stand. I think it's a little bit, okay, it's dropped slightly on the open, I think. Was at 1.36, unless I'm mistaken. Yeah, it was. So so a lot of these markets are very much under pressure. So in terms of, there's still high demand for bond yields at very, very low rates. So that sends certain signals to the markets. It's quite supportive of stock markets, because if you're looking at the bond markets and you're looking at 1.34% and it's a 10-year bond, you know, you're probably looking for higher rates of return elsewhere. So your money is likely to move into more riskier assets like your stock markets. So that's why we're seeing, you know, elevated valuations across the board, because you know, you're not generating any yield from bonds and savings as well. So that's a decision really that traders have to kind of ponder. So when you see these longer term bond yields being so low and in negative territory as things currently stand in terms of negative real yields, then it's quite a disjointed marketplace in our opinion. So we're told by the Fed that this inflation, we're likely to see an uptick and it's transitory. This is the market effectively believing that that is actually the case. If inflation was likely to be a very significant factor for these markets, then you're probably likely to see the longer term bond yields, tick higher quite considerably, and then that's likely to put things like the US stock markets under a bit more pressure. But right now, with all the quantitative easing, all the money printing that's going on, low interest rate environment, low yield environment, it kind of forces the hand of investors and traders, trading large amounts of capital. It kind of forces them into the stock markets to get a better yield, which is basically what's been happening. So quite unusual market conditions really right now. There's a lot of counterintuitive moves. So ordinarily we'd see an awful lot of correlations between the stock markets and the dollar and the gold and flight to safety trades like the yen. Often there's a lot of correlation in those markets. Over the last few weeks, there's been a bit of an uncoupling, and that always makes us a little bit more nervous. Tomorrow we've got the 30-year bond yield as well. And what I mean by nervous is that we're likely to exercise a little bit more patience. And unfortunately, that's one of the pillars in which we trade these financial markets, that we need to get the trades that we're looking for, need to conform and to fit to a certain criteria. And if that criteria is not met, we're generally a little bit more patient, and that's never actually a bad thing. Tomorrow we've got CPI data, so we'll have this session tomorrow. So we'll see how these are monthly figures and they impact the US consumer. So it's really just gauging how much more people are paying for essential goods. And so we'll get a CPI and a core CPI figure. A significant uptick last time. If you look at the core CPI figure, if it will show the map, yeah, there we go. Significant last couple of months uptick, and from a relatively low sort of average base, 0.2, 0.3, something around that. So very significant uptick. However, the Fed are very eager to say, and also the US government are at pains to suggest that this uptick in the price for goods that we're all seeing, that it is transitory and it's not structural and it's not long lasting, because that's ultimately the major concern, is that you get hyperinflation and things can go wrong very, very quickly if that's the case. But we're told that's not the case. So I suppose it's not whether we believe it, it's whether the markets believe it. And I think it's fair to say that right now the markets are very much in agreement that that is likely to be the case. So tomorrow's going to be an interesting day. Nothing of any major concern. If you see some volatility around 6 p.m. tonight, just be mindful. It's the 10-year bond auction. Bond yields are very, very low. So last time we saw an average interest rate of 1.5, a very significant demand for those bonds, 2.6 for every bond sold. So significant demand at a very low rate, and now it's likely to be lower, perhaps 1.34, which is significantly lower than it was last month. And it'll really be interesting to test and to see if there is still very significant demand at these much lower yield rates. So it's going to be interesting, largely on the demand side. How much the demand is there for these very, very ultra low 10-year bond rates? So that's the key. Okay, so look, we'll see how we get on. Good afternoon, Finbar. I hope you're keeping well. Do you happen to be in any trades at the moment, I wonder, Finbar? We're not in any trades currently, so we're going to jump in and see where the opportunities lie. We'll see what opportunities we have for you today now. So this is where we're at. If I just move this along just a little bit. And if I just get up my pen. So really, we're getting a lot of retracement moves from last week's trading, or certainly Friday's trading, across the vast majority of markets we look at. I think there's one market which is the exception right now. So I'm just going to get up this pen. And you can see the euro dollar there. You can see the reluctance for this market to actually break above the monthly low. This is basically why we hopefully I can get up my pen. It's stalling for some reason. Okay, so you're in the Aussie yen, the pound yen, the euro dollar, and the New Zealand CAD. So the pound yen is in the red. Took a short. Sorry, I'm not too sure what that means. Have you just taken another pound yen short trade? Is it? Okay, so you're in quite a few. We were certainly in those yen trades there for the last week or two. Oh, okay, sorry. Yeah, so the pound yen is in the red. You took a short. Yeah. Now I think it's coming back a bit today. Yeah. So we had our stop losses on Friday. Was it the pound yen we're in? No. Yeah, sorry, I'm mixing up our day trading with our capital growth. So we wanted this market to continue lower on Friday. It reversed, and we wanted to, book in profit down at these lower levels, I think. But look, today, like, our bias is still very much to the downside. However, it's important to note that we are actually technically above the monthly low, so we do feel a lot more comfortable getting in below the monthly low, the 151.30, and your one is the 151.27. Okay, so you put up with an awful lot of pain on Friday then, by the looks of it. And I think it was looking like it was heading lower, wasn't it, for a period? So yeah, that's one of those trades. That's one of those trades where you get a false breakout to the downside, and that's really what this price action represents, is that this market is rejecting a kind of a double rejection of the monthly low. So we're getting that sort of reversal signal. So that's one of those trades where there's no major problem with getting into that trade to the downside. The only hesitation I would have about the trade is, where did you place your stop loss? Because this is a lot of pain to have to put up with. Okay, it's retracing back to the downside again today, but that could easily just carry on another couple hundred pips to the upside. So, risk management is always important, just in case you get these false breakouts in situations like this. And the pound yen is notorious for being very, very volatile. You can get these moves on a regular basis, and they can absolutely hammer your trading account if you oversize and things like that. Your stop loss is 154.10. Okay, so up at these levels, okay, like that's a large stop loss there. You're looking at the bones of 300 pips. Nothing wrong with it. So you're probably assuming that we'll be getting down to the 148, 146, 145, something like that. Hopefully it's a positive risk reward trade for you. And yeah, like broadly speaking, our bias certainly short term, you know, if we can get back below that monthly low, would be further to the downside. It would be like a corrective trade. Yeah, you're looking at it long term, so that's fine. That's fine. And as you know, as long as you're working with stop losses and you're taking all that board, so there's every opportunity to get a corrective move. And roughly this is the area in which we'd be interested to buy this market if prices can come back to that level. There's a long way to go, of course, but you can get a correction in this market in 3 days. So hopefully it will continue to be a decent move. And as you know, we were selling it over the last week or two to the downside, but Friday's sort of false breakout trade, you know, we didn't want to sort of hang around in that for too long, just in case we saw this uptrend, because that's what we'd be concerned about, is structural failure trade to the upside. We're looking to sell at these highs, and when it rejects those lows and we get that sort of clearly defined rejection, what we're concerned about is this market just making that next leg to the upside and be pushing above the 156. So that's the only concern about this market, is that we're selling a bull market almost over the last number of months. Just consistent structural failures to the upside. Okay, so we've got these markets right now, which they're all retracing. They're all tradable markets. They're not what we refer to as high probability trades just yet. And the reason why we say is a lot can happen in today's market, i.e. we can break higher and we can reverse and break lower. And we've got this monthly high which we're looking at very, very carefully, the 1681. Now tomorrow gives us a much better high probability trade to the downside, because we can take the low, and if we get some continuation, then there's your high probability trade. So today really we've got a bit of a question mark over this opportunity to the downside, and we want to wait and see what the close is. And sometimes these markets, they just flush straight to the downside, but then we're looking to get the continuation trade even further lower. So so for us to categorize this as a structural failure trade, we do need to see today's close. We need to assess the price action accordingly, see what sort of candlestick. If it's full, then we're likely to get some continuation to the downside. We're likely to see the sellers take further control of this market, because that's the one thing we can all agree on, is that recently in the euro dollar the sellers have been in control. So we've been moving sideways in this zone. We were talking about it for over a month, and prior to that prices have been pushing to the upside. So you always get these sideways moving zones, and then we are very interested in this price action here, because this tells us that actually we've been in an uptrend for so long, the market takes a sideways move, and now sellers are in control of this market. That is the market phase as we see it. You generally get a pullback. We had some more sideways moving patterns, and then we get this little move further to the downside. So what we see is lower highs, and we're also seeing lower lows. So this is a definition of a downtrend. So now, will we get this move? Well, we're going to prepare for that move, but the move is not there for us just yet. So we've got things going for it, like it's got the 1681, which is the, sorry, that's the 1881, apologies. Perhaps I need to get my eyes checked. But yeah, we've got these two highs in here. That's better. The high is the 1880, and today's high is the 1879. So this is how we use support and resistance. This is basically what we use to navigate us through these markets. It depends how price acts and behaves around very important levels of support and resistance. So if it finishes like this and tomorrow we get some further continuation to the downside, then there is your high probability trade to get in, and you'd expect further downside in that market. So you'd be looking at a candlestick that looks a little bit, or a bit of price action that looks a little bit like this. And then you'll have all sorts of, traders, doing these little channel lines. But this is how price action creates those upper trend lines, lower trend lines. So it's just getting into them at a little bit of an earlier stage. It's just for us, and this is purely the way that we trade these financial markets with, I suppose, a high degree of consistency in what we do. This is not the time to pull the trigger. Because we might get some buying coming in and prices squeeze above the 118.81 and we're off back to the upside, and it's probably a medium probability trade at best to the downside right now. But we don't want to trade poor quality opportunities. We want to trade high probability trading opportunities. That's the aim and objective when we trade markets. So tomorrow, very likely to be a decent sell trade in the euro dollar, certainly if the dollar starts to strengthen across the board. But we need to see a little bit more before we can make that decision. Now we can look across all of these markets with very similar analysis. Who's in control of these markets? Well, this bit of price action here gives us a clue. The sellers are firmly in control of this market. We keep getting buyers coming in, and threatening to push higher. Like Friday was a very significant move because this is now the potential of a reversal signal. But what we're doing is this market is now rejecting that high, and we're actually moving in line with the trend. So this is not a great opportunity to probably trade tomorrow. The euro dollar is in a much better position because we've got a strong level. Like, look at all these prices above the monthly low, where we get numerous opportunities failing to kind of close below that level with any significant follow through. So with this one, we get a very sharp reversal. We get these rejections down at these lows. So really what we can say is the 137.80 broadly, and we can give 5, 10, 15 pips either way. That doesn't really matter with a market the size of the pound dollar. But Friday's price action was a strong rejection of that low. So if we apply the same logic to the euro dollar, if we apply the same logic to the pound dollar as we did to the euro dollar just now, then what that means is we're actually selling a market above a very, very important, this to us is a very, very important level of support if prices are above it, and resistance if prices are below it. So what we want to try and do is trade the right markets in the right direction, and we don't want to sell a market with very, very strong support below these levels, because support pushes prices higher. So we just want to make sure we cherry pick the right markets for the right reasons. We got similar analysis in here. However, we're below that important level of support and resistance with previous price action pushing prices lower. Eventually we're getting the flush trade to the downside. So there's a reasonable suggestion to make and a trade idea to suggest that is the next move in the euro dollar as we're looking at these markets right now. Except we're not going to make this decision until tomorrow, until prices break below that level. So I hope that makes sense and it's not too convoluted, but we do have to prioritize some opportunities over other opportunities. So retracement above strong levels of support, so that doesn't, and there's lots of traders that will sell this market, and prices are likely to be pulled down to this low. It's more of an intraday sort of scalpers type trade, very viable, nothing wrong with it. It's just not a trade for us right now. So dollar yen, we're kind of at the previous monthly high. Now let me just reassess that. No, we're not quite at that level. So we've had a rejection of these highs just up here. So this is the previous monthly high, and what we can do is we can take the new monthly low as well. So all we're pretty much doing is retracing last month's price action, and we're firmly within support and resistance. So we're firmly within the middle of that. Last week's move in the yen was really quite significant, and we can see it in the pound yen to the downside and the euro yen to the downside. And again, this is a decent opportunity for tomorrow, the euro yen. So whether we'll be that active today remains to be seen, but tomorrow we're looking like we're getting some, actually potentially some quite decent opportunities setting up. Markets like the dollar Swiss, if we can get markets drifting sideways for a period, that's not a bad thing inside this little zone for the best part of 3 days, because the previous price actions to the upside, we want to know who's in control. Well, actually, if prices push higher from these levels, then the buyers are in control, but very, very quickly the sellers could look to dominate this market in the short term. So a couple of these markets have a few question marks over it. As we're in this little zone in here, we've got a bit of a strong question mark over the viability of this trade. But below the 91.30, we'd expect prices further lower. And above the 91.70, we'd expect actually probably a decent move to the upside, back up to these highs up here. That's what we can expect from these markets. That's what we can expect. And we want the markets to perform as per our expectations. More often than not, they won't do that, but we want them to. That's the aim. Okay. And it's really about taking control over your decision making. And if you have conditions and you have things that you look for as a trader, and if the conditions are met for that trade, go ahead and trade it. That's really what profitable traders do, and they become very consistent at that type of mindset. Where if you look for a very specific trade, that's why people ask us all the time, what sort of strategy should we adopt? Well, there's 200 ways in which you can trade markets. You can scalp, you can swing trade, you can trade reversals, you can trade breakouts, you can trade pullbacks, you can trade a myriad of trading opportunities, but just focus down on kind of the opportunities that you look for and why you look for them. We can suggest some very, very basic, very straightforward, easy to identify trading strategies, and there's a lot of education out there that will do nothing but complicate the process of trading. It doesn't need to be complicated. We look at some people's charts, and okay, this chart here has a lot of lines on this chart, so which we don't really need. Just for your information, a lot of the purple colored lines on these markets are intraday levels. They're levels that are really important at the point in which we're trading that market. But as price moves away, they become less important. They just become kind of swing high, swing low levels. So look, recently 3 days ago, we've got a little bit of a high up here, so we just mark it with a line. It's not hugely significant. It's just a momentum or a recent high. So it's not like these lines are crucially important, but they are to any specific period of time as well. So, but seeing what price action's doing is really important. So, for example, the dollar CAD, we've got buyers are firmly in control, and we see sort of a few opportunities where they proved that that's the case. So prices are pushing higher, and now what we can do is wait for that next opportunity to the upside if our conditions are met. And that's really what we do. We just want to see price action and make decisions accordingly. The Aussie dollar, a very similar situation. Now we have the sellers in control of this market, and they've proved it a few times with breakout to the downside below a monthly low. As your breakout trade, you get the inevitable pullback. So we're creating lower highs and we're creating lower lows, and this is the definition of a downtrend. So for us, we're expecting further downside in markets like the Aussie dollar unless something changes. So very similar to the euro dollar, this is a decent opportunity where we can just monitor today's high and low, and tomorrow if we get continuation below the 74.48, then we get a high probability sell trade with the momentum which goes before it. So we're basically retracing a lot of Friday's moves. The euro pound is in a bit of, we can just really put a blanket over the last 2 months in this market. The bias is very much to the downside, so I think at these points we perhaps got into a couple of selling opportunities and we kind of broke even. I think we took a loser on one of them, but all we're doing is just up and down the whole time. So it's not really a market that you kind of want to be putting all your energy into. And a break below the 85.26 or 25.28 would signify the next move to the downside. But if you look at it on the monthly, it's very, very cluttered down at these levels. You know, this is a market that has been doing nothing but just drifting sideways for 5 months. But the sellers are in control, which is why we're continuing to look for selling opportunities. We're not really talking about buying opportunities in these markets. So we know the direction in which we want to trade these markets. It's just really waiting for the better opportunities to come our way. Pound yen, very similar to the pound dollar. Strong rejection on Friday of the monthly low, and we're getting some continuation further to the downside. So do we want to get in below the 152.36? It'd be a short-lived trade, i.e. prices are likely to push down to these levels, but and our overall bias would be short-term to the downside, but we want to avoid selling above strong levels of support if we can. Euro yen, different situation. We're already below the monthly low, so we'd expect further downside. So we have all these things. It's about, I suppose, picking the slightly better opportunities. Sorry, bear with me 1 second. Okay, sorry for that. So yeah, it's looking at the gold. We're that's on the hourly, so let's look at it on the daily. So our bias is to the upside. We would have expected a little bit more volatility than this because we've been drifting sideways for quite some time. The initial price action was very much lower. We get the consolidation, which is what you always get after a move. And then we're thinking, okay, well, we're in this market condition right now. Gold is a hedge against inflation. There's inflation concerns, so it can stack up to the upside in terms of a trade. But then we see a little bit of hesitation around this zone, and then we see this candlestick here, and that's a rejection to the upside. So we sit tight, and then we see, do we get follow through? It's not great. The next day is just pure indecision. Then we have we're trading inside previous days highs and lows, and we're seeing the same thing today. So actually, does a trade exist to the upside? No, not just yet. We're still in this consolidation zone, just at a slightly higher price. That's really all that's happening. So we are still waiting for that move potentially to the upside, or if it starts to break lower and we get the next leg lower, that might be a viable trade depending on what else is going on. Excuse the scribbles, but that's the analysis on gold. Crude oil, the strange crude oil market. Not strange for its price action, but strange in terms of what's going on with OPEC and the wranglings between Saudis and United Arab Emirates, trying to agree, trying to inject a little bit more supply into these markets. So there's significant restrictions in these markets still, and OPEC have deferred, making a decision. So things remain as they are. Restricted supply, increasing demand. Really, prices can only really be going up. However, this price action begins to suggest otherwise. So, will we get that next leg to the downside? That's what we're keeping an eye out for. So we make a low, we get the pullback. Now, do we get that next extension to the downside? Peculiar things have happened. That's the price at which we would, if this market closed tonight at that price, the 72.55, there very well may be some continuation further lower. Problem is, it's kind of counterintuitive, largely because the fundamentals would suggest that we'll get an uptick in price. So you do have that to deal with oil at the moment. The market that keeps on giving, the indices markets, all-time highs again today. We're up at the 43.72, 74 level. There is, because of reasons in terms of where can people put their money, they either sit it on the side, which a lot of investors are seeming to be doing, or they're pumping it into stocks and shares and indices, and they are continuing for now to just continue to make new highs. So largely manipulated markets, but the strong support for them. The number of people in terms of participants in these moves are dwindling, let's say. But any time we get any bit of selling, we get a little bit of an uptick. So it just shows the appetite for these markets to continue to the upside. The Nasdaq, same position up here, all-time highs again. Dow Jones, very close to all-time highs. Things are a little bit more cluttered for the FTSE market, but the DAX, again, it's looking a lot more positive. And we had a really positive day for the Nikkei on Friday. It just remains to be seen what's next. And then Bitcoin, it's just drifting in a sideways fashion. So I know there's a lot of nervousness for further downside. If prices break below that 29,000 level, you're probably back to the 20,000 level. So a very significant drop below that 29,000 level. So I'm just conscious of the time. I'm also conscious of the recent price action, which is very much reversing Friday's moves. So tomorrow there's likely to be really decent high probability trades. Certainly if we get some renewed strength come into the dollar. At the moment we have a bit of a question mark whether that's going to be the case or not. So we certainly won't be chasing trades today. We won't be pushing for any. We don't want to be speculative. We don't want to just take a punt. We want to actually base it on decent analysis, let's say, and we just don't have the tools to work with. We don't have the ingredients to be able to get into some of these trades with any significant confidence based on Friday's price action. So for that reason, we're going to try and stay a bit calm today, be a bit patient. We talk an awful lot about being consistent in your strategy and your approach, being very disciplined with your capital. And the third pillar is based on patience. And today could be a decent day for patience. And we'll see tomorrow if we get some continuation trades. They'd be worth us looking at for sure. Okay, so on that note, I shall probably end it there if that's okay. We'll be back again tomorrow around 12:30. So if you can join us for that, please do. And hopefully we'll have some decent opportunities. And don't forget, we've got US CPI data, inflation data tomorrow. We also have bond auction tonight and tomorrow. Will we get a reaction? We may not. But if there is volatility at 6 p.m. tonight, you'll know the reason why. And tomorrow with CPI data out of the US will be very significant and very likely to be a volatile event. So if you can join us for that, please do. Give us a thumbs up if you can on the video. We'd appreciate that. And we'll let you guys go. Thanks for joining us as always. And we'll be back tomorrow about 12:30. So for everyone here at the live trade room, take care. And we shall speak to you soon. Bye for now.